Hey everyone, welcome back. One of the coaches at Unga Academy here, and this equity line that you see at this moment is the result of a trading system on the mini S&P 500 future which we developed starting from a very simple starter script. We also applied some even banal exit rules, and as you can see we have excellent results both in terms of stability and profitability. Before we start though, I invite you to please subscribe to our channel and click on the notification bell to stay updated on the release of all our new content. And hey, why not leave us a like to this video? Thank you so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Now in this video, we're going to be talking about how effective it is to trade with simple ideas. It's not necessary to experiment with complex indicators or indicators of indicators and so on. What we really need to do is to understand the nature of a market and then to figure out how to make the most of its special features in a simple way. But let's start from scratch and begin creating our trading system. Let's start from the basics, the core of the system. As you can see, we're starting from an empty code, as always. So the first condition we're going to write is the following one. If there's a cross between the close of the bar and the low of the previous session, then we'll buy the next bar at market. Vice versa, if the cross crosses below the high of the previous session, then we're going to sell the next bar at market. So let's try and compile this code and see what we get. The equity line we get is already quite interesting, especially if we consider that we obtained it with just 2 lines of code. It goes up and has a fairly good average trade of $105. The number of trades is 1,655, which is pretty high. But what's the problem with this strategy? Well, the problem is that it trades 100% of the time. Indeed, we never give the system a chance to exit, except when we give an order to reverse the trade. So we'll either be long or we'll be short. Now, if you look at the chart, you can see that there are no conditions where we are flat. As always, of course, what could we set as our first exit? Well, we could set a profit target and a stop loss, maybe $3,000 and $1,000 respectively, which are pretty reasonable values for the mini S&P 500 future. So let's compile the strategy and see what the effects are and how the trades made by the strategy change. Now, I'd like to focus specifically on this case, where we have 3 long entries that are all based on the same condition. You can see that we have a price drop. Then, if a candlestick is formed and it returns to the levels above the low of the previous session, namely this level, after this bar, the strategy enters long at the next bar. The same thing happened here. As you can see, the close is near the low of the previous session. The next close is above it. We go long, and again we hit the stop. An idea that could come from looking at this type of setup would be to limit the number of trades per session to 1. And to do this, we can simply use a condition based on the market position. Indeed, if we find ourselves at the last session bar, then we'll say that condition 1, which will be our condition to enable entries, is equal to true. Otherwise, if the market position changes and becomes different to 0, which means that we're either long or short, then condition 1 will be equal to false. So let's add this condition before the trading orders. Let's write, if condition 1, then begin. Now these are our 2 conditions inside the if construct, which will only be executed if condition 1 is true. At the end of this group of conditions, we'll put the keyword end. And in that way, if we go and compile the data, we'll obtain, here we have, as you've seen, only 1 entry per session. So only 1 entry here, and so on. Another thing that I wanted to point out is another little catch that could happen, namely that of entering right at the beginning of the session. You can see that here, apparently there is no cross, but we still enter at the second bar of the session. This is because to have a cross we need 2 bars, and therefore we must somehow give the possibility to trade, to enter the market, only if we're at least 2 bars away from the end of the previous session. It's a good idea to use time conditions that straddle the session by about a couple of hours. A little bit like saying, well, let the market start, and let's leave it a couple of hours to take its direction, and then we'll start trading. And we'll do the same by stopping 2 hours before the end of the session. But how can we tell multi-charts to trade only when straddling a certain trading time window? Well, with regards to this market, which opens trading at 5 p.m., so the first bar closes at 5:30 p.m. and then closes at 4 p.m., we could simply say if time is greater or equal to 1900, namely 5 p.m. plus 2 hours, or T is less than 1400. In other words, if we're between 7 p.m. of this day and 2 p.m. of the next day, then we'll trade. So let's go compile our script and see what we get. Now we'll see that these rather nasty entries no longer appear at the beginning of the session. And so what do we get? Well, in the end, we get this equity line, which is exactly the same that we started with. It's a very good equity line, and we also have a large average trade that lets us cover all the operating costs related to the system, so both slippage and commission costs. So as you can see, the ideas behind it are very simple. And finally, we could add another condition and set a temporal exit. Why am I suggesting this kind of exit? Well, because if the market doesn't make any decision, and we don't reach either the stop loss or the profit target, then it might be convenient to add an additional condition, where we say that if the bar count since we entered the market is greater than 230, because remember that a session is 23 hours long, and therefore 23 hours multiplied by 30-minute bars is equal to 46 bars per session. And 46 times 5 is equal to 230. So here we're simply saying that if 5 sessions have passed, which corresponds to a trading week, since we entered the market, then exit the position, because the cross based on the high or low of 5 days ago may no longer be valid. So we'd better exit the trades. So let's go and add this condition as well. You'll see that we have a slight change in the average trade, but really nothing else. We're obviously making more trades now, but we have enhanced the equity line. You see that this part has been declining since the beginning of the year, so since late 2021, early 2022. Given the current situation, the trading or the strategy isn't performing well, but the same goes for the index as well. Consider that in this period, the future is significantly larger than it was in 2008. So here we could also introduce some position sizing rules to be able to compare the strategy in this period with this other period. But right now we've got nothing else to add. I believe that this started script can be a really good starting point from which you can go ahead in the development of the system. Perhaps by adding a filter based on volatility or directionality. In short, you go and have some fun. What I do want to tell you, however, is to operate in a simple way, using simple ideas that I guarantee always turn out to be the most solid and performing in the long run. Okay, so if there is someone among you who is interested in the world of systematic trading, we're going to leave a link in the description of this video from which you can access a video of Andrea Unger, or get our best-selling book covering only the shipping costs, or even book a free call with a member of our team. And if you like this video, please leave us a like, subscribe to our channel, and click on the notification bell so that you can stay updated on the release of all our new videos. And with that, we'll see you in our next video. Bye-bye, everyone.